Good morning. This is Dave Toth with an RJO MRT Technical Webcast update on the S&P 500 market and the currently positively correlated energy complex for Monday, August 9th. Starting off here with an intraday chart of the S&P 500 E-mini market, and as we discussed in the latter part of last week, the prospect that was later confirmed of a bearish divergence in short-term momentum if the market broke below the 11.12 and a quarter corrective low from last Wednesday. The market broke that low, confirmed the divergence that defines the 11.27 spot 75 high from last week as the end of at least the rally from the preceding rally from the 1083.5 low from July 30th. By virtue of the extent of late Friday's and overnight's recovery, however, so close to last week's 1227 highs, we think that within the context of the broader recovery throughout most of July, that Friday's setback, despite this confirmed bearish divergence in momentum, is a relatively minor bull market correction ahead of new highs above 1128. In this regard, Friday's 1103.75 low is the latest and tightest corrective low within that recovery. And on a next larger scale, we still require weakness below the 1083 low from July 30th to really negate the past month or 5 weeks recovery and expose a larger degree of reversal lower. Despite this short to intermediate term constructive behavior, however, we're still not out of the woods with respect to the prospect that the entire July-August recovery is just a major bear market correction of the entire April through July slide. You can see the market has just gotten above recently the 50% retrace, but to this point still remaining well below the April highs. We cannot let our guard down with respect to the prospect that this is just a labored three-wave corrective sequence, and weakness below levels like Friday's low and certainly the 1097 low daily close from July 29th is a type of level the market needs to fail below to resurrect that broader peaking and reversal threat. In lieu of such weakness, further and possibly even accelerated gains remain anticipated, again with weakness below 1083 required to really negate that bullish count. Moving to the energy complex, and given its positive correlation with the equity markets, understandably, we think it's important that the extent of overnight's recovery that exposes the second half of last week's sell-off attempt thus far as a three-wave and thus bull market corrective sequence. The crude oil market is coming off a confirmed bearish divergence in momentum, and in that regard, the very short-term trend is still confirmed as down. But within the context of the broader recovery from the late May low, in fact, and certainly from the early July low, looking here at a daily chart, and the market still remaining above former significant resistance, new support from the 79 handle area. Certainly, from an intermediate to longer term perspective, it's worth approaching the second half of last week's setback attempt as merely a corrective blip within this broader recovery. As a result of overnight's strength, weakness below at least the 80.04 low from Friday is required to mitigate this bullish continuation and expose a larger degree of reversal lower. In lieu of weakness below at least 80, the figure, a resumption of the past couple of months' recovery is anticipated in the days and perhaps even hours immediately ahead. Looking here at the September RBOB market, the extent of last week's sell-off is certainly much greater than that occurred in crude oil and, as we'll show in a moment, the heating oil market. But the fact that we're bouncing from the exact 61.8% retrace of the preceding 203 to 219.93 rally, with Friday's low being 209.54, exposes this second half of last week's sell-off attempt as a three-wave and thus bull market corrective sequence. We fear that if the market resumes this weakness below Friday's low at 209.54, that could evolve into a much steeper reversal lower. Looking here at a daily log scale close only basis, we're still have to give great consideration to the prospect that all the price action up from the late May low at 191.93 is a very labored bear market corrective sequence. Thus far, the market has failed to sustain prices above the 214 to 216 range and kind of indicates the labored nature of this recovery that could be, again, a major bear market correction ahead of steep losses below the May 25th low at 191.93. But for the time being, the intermediate term trend arguably is still up, with weakness below at least now 209.54, and certainly the 203, the figure area from late July, really required to defer or negate any kind of at least intermediate term bullish policy. In some, we advise neutral to cautiously bullish policy and exposure, with weakness below at least 209.50 required to negate that. And finally, looking at the heating oil market, very similar to the crude oil market, on a daily basis, you can see the extent of not just the past month's recovery from the early July low at 189.68, but even dating back to the late May low at 184.83. Clearly, at least the intermediate term trend is up, with former resistance, new support from the 210 to 208 range really required to be broken to expose a larger degree of reversal lower. To this point, from the May low, clearly all the price action up is just a three-wave sequence. And if the market can prove weakness on an intermediate term basis below about 208.50, we'll be of the opinion that this is a three-wave and thus bear market corrective sequence to significant losses thereafter. While the market remains above 208.5, at least the intermediate term trend is considered up, and this market should not surprise by further and possibly even accelerated gains. In this regard, in this intermediate to longer term bullish regard, we're approaching last week's setback attempt as a bull market corrective sequence, with weakness below Friday's low at 213.28 required to threaten or defer that bullish count and expose a larger degree of reversal lower. In sum, a cautiously bullish policy remains advised in the heating oil market as well, with weakness below 213.28 and certainly 208.50 required to defer or negate this bullish count. Please stay tuned to updates on these and other markets on our rjomrt.com website, and good luck with today's trading.